What else is new, guys? What else is new? Yet again, another red day in the stock market. What a freaking disaster today. We got a lot to break down in this video. We have to talk about the markets, charts I'm looking at, stocks I'm looking at, which a lot of the stocks, I think all the stocks we're going to talk about today reported earnings today. We have to talk about Disney, Roblox. Actually, Roblox was yesterday, but still, Roblox, Rivian, Dutch Bros, Wendy's, the list goes on. So we have a lot to break down in this video, but before we do, hit that like button, subscribe, get your free money from Moo. Literally free money, guys. Use that link down below, deposit at least $100, and you get up to 5 free stocks, each of which could be valued all the way up to $3,500, and you have a chance at a free share of Twitter. Use that link, find out the details down below, and with that being said, let's dive into it. So the markets went down in a pretty major way today. Not as bad as, some of the days we've seen, but don't get it twisted, guys. It was a bad day out there. The NASDAQ went down 3%, over 3% on the day. We had the Russell down 2.5%. SPY went down 1.6%, as we had the Dow Jones down a little bit over 1%. And believe it or not, the VIX went down on the day today as well. VIX went down 1.3%, and the metals, gold and silver, both of those, each of those went up 0.6%. And look at this. Not much has changed in terms of the 4-hour chart. SPY and Triple Q, both of those are still towards the bottom. I mean, they're pretty much at the bottom now of the downwards channels. And does that mean they're 100% going to bounce back up now? No, it doesn't mean that. They could easily go lower. And, today proved that. I mean, we went down another 3%. We're at 292 on Triple Q. SPY is at what? 392. So we're getting down to new 52-week lows. And at this point, are we at a 1.5-year low? I mean, when's the last time SPY was at 392? Let me pull up this yearly chart. Maybe, actually, we can't even see it on the yearly chart. Maybe the 3-year chart. Let's zoom in a bit. It looks like last time we were at 390 was March of 2021, so about a year and 2-3 months ago. And Triple Q, it might be even worse for this. Maybe not, actually. Actually, yeah, it's worse. Last time Triple Q was at 290, seems like it was back in November or December, right around there of 2020. So we're talking about a year and a half plus ago at this point, or right around a year and a half ago is the last time Triple Q was in the low 290s, which today closed at 291.84. So markets they're just continuously getting destroyed. I mean, that's just the reality of right now. And like I say all the time, guys, we have to react to the markets. We can't just hope and sit and pray and just be like, oh, it's gonna turn around tomorrow, when each day keeps getting destroyed, right? So we have to just sit back kind of and react to it, which in this case, it clearly took the lows out. We hit 290. The previous low was at 295. So until we get that reversal, we're going to be continuously getting hit here. And by reversal, I mean we got to get Triple Q breaking out of these alerts that I have set here. 305, 310. If we start making higher lows above 305, 310, we might start seeing that short-term rally that I've been talking about, which at that point, Triple Q could end up going 330, maybe 340, but we're just not getting the confirmation yet. And again, we just have to react to what the markets are telling us, which now we hit fresh lows. There could be more downside on Triple Q and SPY. That's just the reality. And for SPY, I have my alert at 405, followed by 415. If these levels start breaking, that is where we could start getting that extended relief rally. So let's just watch it. Set your alerts. I'm going to be watching what's going on at these points for SPY and Triple Q. And keep your eyes on the VIX as well. VIX is at very elevated levels right now, 30, 35. If we're above 30, guys, that is very elevated. 35, obviously towards 40s, even more elevated. And I've said this before, but I'll say it again. The VIX, it hasn't really gotten much above 38, since, or at least over the past couple of months. If we pull up the 3-year chart, it's going to tell you something else. We got to 85 on the VIX during the March 2020 crash. And during that time period, March, April, the VIX was, jacked up above 40, 45, 35. And, it obviously declined from 85, which was peak mania, I guess, in the middle of March. It declined from that point, towards May. But still, it was above 35.40 even into May. So let's watch what the VIX does around this 35.40 level. I think it's it's a very interesting spot to say the least, guys. So with that being said, let me know your thoughts in the comments. Smash that like button if you haven't done so already, and make sure to subscribe. Just doing those two things, guys. It's free, and it really helps out my channel and the YouTube algorithm. And of course, I appreciate you guys as always for tuning in. You guys are awesome. So let's now talk about some earnings, some stocks. And the first one is going to be Disney. You know, Disney is one of those companies that is in the limelight right now. You know, for better or for worse. We're not going to break that down in this video. But yeah, you know, there's a lot going on with Disney, from you know, the business to you know, news outlets. You know, we're not going to get into that in this video, politically speaking, but there's a lot going on, and I've been buying. Full disclosure, guys, I have been buying Disney on this dip, on the way down, and these earnings that they just reported, I'm actually pretty happy with these earnings. I'm not going to lie. I didn't dive too deep into them because they came out about 20-30 minutes ago, but I glanced at them, and of course, I'm going to dive deeper into them later or even tomorrow morning, depends on when I get to it, right? But it's going to be pretty freaking soon, right, guys? I'm going to dive deeper into it. And, you know, right now what we got is adjusted EPS of $1.08 versus $1.07, which beat. And revenue, we got $19.25 billion versus $18.88 billion estimated. So they beat revenue by a good margin there. They beat adjusted EPS, so double beat. Sales for Disney Media Entertainment Distribution segment up 9% year over year. Not too bad. And listen to this, for parks, experiences, and products, that growth year over year is up over 100%, which makes sense, guys. Those parks are very packed. People are going a lot more than last year and a lot more from the year before that, right? And total Disney paid, listen to this, guys, total Disney Plus, rather, paid subscribers as of April 2nd were 137.7 million, which is up 33% year over year. Pretty good, guys. 33% year over year. And let's see if anything else came up since I took those notes. Let's see here. Yada, yada, yada. Let's see here. Oh, yeah, look. That Disney Plus paid subscribers number beat the analyst consensus, which is always nice to see. And it's funny because now the stock is actually under where it closed at, but it was above by a pretty big margin. It closed at 105, closed down 2% on the day. When earnings came out, it shot up to 112, which initially that is a $7 pop. It went up 6-7%. And now it's at 104. It looks like it gave back pretty much all of that gain. But overall, I'm not too worried about what happens in the short term, guys. For me, Disney is a long-term play. It's one of those stocks where, and it's an individual stock, obviously, which a lot of individual stocks have been destroyed lately. We know that. The speculative ones, a lot of them are down 80, 90+%. But for Disney, it's not speculative, and it's truly one of those individual stocks that I feel comfortable buying and holding for 5, 10, 15 plus years, truly. And I don't want to say I'm 100% positive, 100% certain, because nobody knows for sure what's going to happen. But long term, I'm very, very certain. For me, I'm 98% sure that Disney's going to be bigger. It's going to be a better company. People are still going to be watching the movies, in love with the brand, the characters. I don't see that going away. I just don't. I mean, look at the new generation, right? People are still watching Disney. I grew up on Disney. You guys most likely grew up on Disney. It's not going anywhere. So for me, I'm buying this dip. It's now down 48, 50%. And we're getting to a point where if it gets under 100, this is going to be a bargain, in my opinion. Seriously, if we're looking at least 3 to 5, 10 plus years out. For me, it's going to be a bargain. I'm going to be buying way more Disney for sure. So let me know your thoughts on Disney down below in the comments. I would love to know, as always. And now let's talk about some more stocks, guys. Let's talk about some more stocks. So we have Roblox, which I believe they reported yesterday, but for some reason, I don't know why, but I completely forgot to talk about Roblox. The stock went up 3.4% on the day today, and they ended up doing Q1 EPS, I think it's unadjusted, EPS of negative 27 cents versus negative 22 cents estimated. So they missed on EPS and they missed on revenue, 537.1 million versus 639.46 million estimated. So they double missed, not good. And let's see what happened initially when they reported these numbers. It looks like, it tanked, guys. Look, the stock closed at 23 yesterday, and it went down to 20 after these numbers came out, which is a drop of at least 13%. 15% almost. So they double missed, and average daily active users came in at 54.1 million, up 28% year over year. Not too bad. They see April sales of 189 to 192 million, up 30 to 32%. So they're still growing, guys, year over year on these key metrics, 25, 30, 35%, right? And they see April daily active users at 53.1 million, up 23% year over year. Not too bad. And it looks like the stock actually rallied this morning. It opened up, look at that rally. It opened up at $22 roughly, and it ran to 28. This thing ripped 30%. And then it ended up going down to 24 at the close, so it dropped another 14. So it ran up 30% rather in the morning, and then it dropped 14% for the rest of the day. But still net on the day, if you're looking at where we opened up on the day today at about 21.22, net the stock went up 15% on the day, 10, 12, 15%. Can't complain. So Roblox looking good on the short-term charts, but long-term, I mean, we all know on the 4-hour chart, it is getting obliterated. So for me, I'm not going to fight the trend. I'm not looking at it as a long-term investment either for me personally at this point. So I'm just going to set my alerts. I'll put one at $40, and you guys might be like, Stas, $40, it's at 24. Well, I don't care. I'm going to put it at 40, and if this alert hits in a year from now, 5 years from now, who the heck knows what's going to happen, right? But if it hits in a year or two from now, I'll be like, okay, now it's time to look at Roblox, right? Even in 5 years from now, right? Even in 5 years from now, because who knows how low this goes. It might go to $15, $20, 12, and then it might take a couple years to get back to 40. If it ever does get back to 40, who knows? With these unprofitable growth stocks, they might never get back to these prices again. We don't know. So the next one, which is also a speculative play, is Rivian. And not to toot my own horn, and I mean, it doesn't take a rocket scientist to be able to spot this, but we all kind of knew this thing ran up way too wildly when it IPO'd, and it was way too overvalued. And now look at it. It was 180, now it's at 18. It's down 90%, just like that. Boom, couple months, 90%. And their earnings were awful. Negative $1.77 EPS versus negative $1.44 estimated. So they're losing money out there, you know what. An adjusted EBITDA loss was $1.14 billion, which was way higher than the loss that they saw last year, adjusted EBITDA loss, which last year was $396 million. I mean, come on, guys. Their losses are widening, and I get it. They're growing, expanding. I mean, I saw a Rivian a couple of weeks ago, and I'm not going to lie. That was probably my first time seeing it on the road. It's a nice truck, but those headlights, I mean, I'm not editing this video, so I'm probably not going to pop a picture up, but those headlights are horrible. I mean, make the headlights better, and I think I'd like the truck better. But my opinion doesn't matter, guys. I'm just one person, right? But I'm sure a lot of you could agree with that. It's a nice-looking truck, but those headlights are just horrible, in my opinion. And they're not making many cars. You probably haven't seen a Rivian. I was kind of shocked I saw one because Q1 total production was only 2,553 vehicles. Q1 total deliveries were only 1,227 vehicles. So, I mean, I don't even know how I saw this thing, but I saw it with my own eyes, guys. It's nice, but those headlights, again, I'm not trying to harp on that, but the headlights are crap, I'll be honest. And the stock's been doing crap as well. Look at this. It's under the moving averages. It's down to a new low today. We got to just set our alerts. I'll put this one at 40 as well. I'll take a sip of coffee or water, guys, not coffee. My coffee's gone. I drank my coffee, guys. And, we'll see if this hits in a year, 5 years. If it never hits, whatever. But I'm going to put it here. Markets that were above $40 a share. The next one, which brace yourselves for this, guys. Seriously, brace yourselves. It's Dutch Bros. Oh my gosh. Dutch Bros is gone. It's not gone like it's going out of business, but it just fell off a cliff. It is gone out the window. It got tossed out the window over the bridge, down the cliff, into the water, guys. This thing went down 15% today at the close, and it closed at $34 a share. Now, after the bell, it's at $22 a share, down another 35%. So this stock went down essentially 50% today. It closed yesterday at $40. Now it's at $22. It essentially went down 50% today. So let's break down what's going on in terms of these numbers. They did negative 2 cents EPS versus the penny estimated, so they missed on EPS. Okay, and revenue also, actually, it did not also miss. It actually beat $152.2 million versus $145.63 million. So they beat revenue, missed EPS, and they see full year 22 revenue of $700 to $715 million versus $717.22 million estimated. So that is not that bad, although it is under the estimate in terms of that full year 22 revenue guidance. Again, they missed on EPS, and I'm not sure why that warrants a complete collapse in the stock. Maybe I'm missing something. And again, guys, I've mentioned this before on my channel. I am not too in tune with Dutch Bros. Maybe there's got to be something I'm missing. Obviously, I haven't done much research into the company, but it says here Q2 same shop sales are estimated to be flat. Oh, maybe that's what it is. Or slightly negative as they face macroeconomic headwinds, as all of us face that, let's be honest. So, yeah, they're getting hit. Okay, that's got to be it. Same shop sales are estimated to be flat to slightly negative in Q2. That's not good. So the stock is cratering off of, again, it's like going to the top of the Empire State Building and just jumping off. That's what's going on with this stock, guys, in reality. So it's gone. It's falling. It's a falling knife. We got to watch out for it. It might rebound. It might take a month for it to rebound. Who knows? Just because it's a falling knife now, it doesn't mean it has to rip back up now. You know, it could easily slowly bleed from here, from 21 to 20, 19, 18. And it might go down even more. So watch out for this one. It's a growth stock, but they're going through some short-term pain, as a lot of companies are out there. Wendy's is another one that's going through some pain. Look at this. Falling knife. The chart looks very similar to Dutch Bros. It went down 11% on the day, and they actually reported in the morning adjusted EPS of 17 cents versus 18 cents estimated, so that missed. Revenue of 488.6 mil versus 497 mil. That missed. And they see 2022 system-wide sales up 6 to 8%. Okay, not too bad. And U.S. same-store sales for the quarter rose 1.1%. And to be honest, guys, I'm only covering this stock because they reported earnings. You know, I'm not touching this or Dutch Bros by the way they look. I'm not touching these stocks with a 10-foot pole, no chance. But if they recover, who knows? Maybe if Wendy's starts breaking, maybe $20. Let me actually put my alert there. $20 on Wendy's. And on Dutch Bros, I will put an alert. Oh, I already have one. $48, which at this point it's got to double up and some to get back to $48, considering it's at 23 after the market. So let's take a look at Yeti. We're gonna do one or two more here, guys, before we wrap up this video. Yeti reported, ticker symbol YETI, and this one, like the other ones, like a lot of stocks, it's been downtrending for months, and today it didn't do that bad. It only went down 0.3% after reporting earnings of 33 cents versus 32 cents estimated, with revenue of $293.6 million versus $290.33 million estimated. So they actually double beat. They see full year 22 sales increasing 18 to 20% year over year, not too bad. And they raised their full year 22 adjusted EPS guidance, which we all like to see that. Why not? Why wouldn't we want to see that, right? So I'd say Yeti had a pretty decent quarter, but again, until these stocks start to reverse, guys, I'm not looking to touch them. You know, these are clearly downtrending, and I'm not looking to fight the trend, so I'm going to set an alert. Markets that were above. We'll put it at $56, right by this 180 SMA. And last but not least, one of the stocks that's been hit quarter after quarter after quarter after quarter, and I don't own it. In fact, I don't own any of these stocks but Disney, guys. Full disclosure, all of these stocks we've talked about, I do not own any of them except for Disney, right? So keep that in mind. This stock we're going to talk about, quarter after quarter after quarter, has been destroyed. It's Beyond Meat, BYND. I mean, literally quarter. I'm not even exaggerating. For the past, like every time we have earnings season, Beyond Meat comes around. I'm like, oh, let's see. The stock's gonna go down another 10% today, and did not fail to do that. Today, the stock went down 14% on the day. Look at this, guys. On the day, 14%. It closed at $26. Now, after hours, it is at 20 a share, which means it dropped another 20% after hours, and now it's down 35% on the day. I mean, this is just, this company could go out of business. You know, I still see their products all over the place, I'm not going to lie, but with how stocks are looking these days, you know, these straight up downtrends where it keeps getting cut in half, cut in half, cut in half, I mean, it makes it seem like all these companies are going out of business. You know, that's what for these high growth stocks, right? I mean, that's kind of what it's like, or at least it seems like. I'm not saying Beyond Meat will go out of business, but the way the stock's been going, it's getting closer to zero, guys, than $100, right? Let's just be honest here. So Beyond Meat, it's getting destroyed, guys. $1, they lost $1.58 on the quarter versus the $1.01 estimate, so they missed wildly on that. 109.45 million revenue versus 112.4, they missed on that. And they see full year net revenues of 560 to 520, or rather 560 to 620 million versus 588.87, which is okay, right in line with the estimate. But overall, I mean, this thing just keeps bleeding money. It keeps getting hit. I'm sure they're diluting shareholders 100%. I haven't checked the shares outstanding, but I'm sure they're doing that. And the stock just keeps getting hit and hit and hit. And I'm sure, what's the other one? Tattooed Chef. That one's probably getting hit after the bell now. It's got to be, right? Maybe not, honestly. Yeah, it's actually not. It's up a little bit. But Beyond Meat's getting destroyed, guys, and a lot of these stocks are. So with that being said, I guess we'll wrap the video up. If you enjoyed it, hit that like button, subscribe. It really helps me out in the YouTube algorithm, guys. I appreciate that as always. And don't forget to get your free money from Moomoo, up to 5 stocks. And you get some money from Webull as well, up to 5 stocks from them. Use the links down below. Get yourself 10 free stocks, guys. Deposit $100 into both of those platforms. You get your money. And with that being said, I'll catch you guys in the next video. Thanks for watching as always. Peace out.